From the TraderGuy.com, this is Chris. I'm looking at the dollar Canadian dollar pair. In the early part of the afternoon on the 19th, you can see that we initially fell during trading on Tuesday, reaching down to the 132.5 level. This is an area that's been important more than once. It's the middle of the overall range that we had been in. And at this point, you can see that I have a triangle that was on the chart. We broke above it. We've pulled back. We've now found support at this uptrend line and the 61.8 Fibonacci retracement level. These are all reasons to think that this pair is going to go higher, and I'm getting long at this point now that the 50-day EMA is involved. A break above the 133.5 level for me only gives me more confirmation, probably sending this market to 135. Crude oil, it's pulled back a little bit during the day, but really at this point, the correlation between the Canadian dollar, at least against the greenback in crude oil, has changed. The world's largest producer of crude oil is the United States, and they're even exporting at this point. So while the Canadian dollar may be hypersensitive to crude oil against other currencies, I am starting to witness a little bit of the correlation breakdown in this pair. So that's not as big of a concern as it has been in the past. Certainly it looks like we're going to try to grind higher. Keep in mind, though, that the Fed is this week, and they could do something to perhaps try to kill off the U.S. dollar. But with weaker economic numbers in Canada, I think this might be the one pair that may see U.S. dollar strength, even if the greenback falls against, the euro, the pound, the usual suspects.